Well, hello everybody, I'm LA Little, and this is your daily NeoTA wrap. We take a look at these markets. We do it from a neoclassical perspective, each time asking ourselves, what happened today? What does it tell us about the coming ones? I do this show 4 times a week, every Monday through Thursday, broadcast at or before 10 o'clock Eastern Time, archived on YouTube under the channel LA Little. As far as what happened today, it was a rout. Short covering, not today. Short expansion is what it was. What we did was we blew out a bunch of stops today, and we blew them out pretty much around the world. Actually, probably not so much around the world, but certainly both indexes and sectors here in the US. 2% lower, almost 3% lower on the Russell. If you look elsewhere, gold got a little bit of a pop, but actually kind of disappointing given what was going on. Bonds soared $3, 2.5%. That was the big news. The other big news was the dollar. The dollar actually sold off today. It wasn't a flight to quality. If we look at the indexes and we start to assess what took place today, you can see a huge decline, percentage-wise 2%. That expansion of the range has finally taken place, right? We've been watching this range. There was kind of like two layers to it. There was the top one and then there was the bottom one. Well, today they blew away the bottom one. They not only did they get under and into it, they blew away stop after stop after stop in terms of people's where they would place those stops. Given the move down now off the top straight line, you can expect some sort of a bounce, right? Usually when you blow out stops, right, those people that are going to sell sold. Now you get some sort of a bounce. That bounce typically is a failure. If you look at the retest regen now, it's actually going to be a long way up potentially, right? You've got this small one over here, but I like to look at whatever the lowest one is. That's the one I like to look at. And in this case, actually we may even have broken this one. Let me see what that number is. 2056.52. We close at 2057, so we're just over it. So the retest regen could actually take you all the way back to 2098. That's where the breakdown started from today, 2098.63. I don't think you're going to get that high. The bounce maybe gets back into this bar, maybe the high of that bar. That would be a heck of a bounce if it came from there. You can see what I'm doing here. ABCD structure to try to take it lower. But I do expect, given the wipeout, you could get some extension tomorrow morning potentially, or maybe you just get the bounce right off these lows. But this kind of damage, it is damage now, and we've been watching for damage for a long time. That's going to require some repair, and that's going to take some time. If we look at it on the weekly, you're under a swing point break here. This is Monday. We got a shortened holiday week. Has to stay under that to be a break on multiple swing points. If it happens that way, and given what happened in Greece over the weekend, I don't know that I need to go into all that, but you had the the surprise snap election call for put the plebiscite in front of the people and say, do you want us to negotiate or not? That's happening Sunday, so the markets are held hostage until Sunday. You've got the default taking place tomorrow. You've got the ECB unwilling to extend those loans that they've been making. Therefore, the Greeks were forced to shut down their banks, put capital controls into place. They're spinning fastly, in a fast way, kind of out of control here. And I'm sure to some degree what the European Union is doing is putting the pressure on the Greek people in terms of the banks being shut down, and making those people think hard and fast about what they want to vote. Do you want to stay in the euro or do you not? Do you want to take the bailout offers or not? And that's going to be a hard choice, when you put it in front of the people like that. And I suspect that's part of what's going on here. So, we could wake up Monday next week, European Union starts negotiation with Greece again, and we're right back where we were. So it's news flow at this moment. We've got indecisiveness about exactly what's going to happen, but what we can tell is we have some damage, and that damage is probably going to take a while to correct, especially if you break on multiple swing points. That means by Thursday U.S. time, you need to get back above these lows. If you don't, it's going to be a tough situation. 2067.93 is the number. That's on the S&P. But if you look elsewhere, the damage was strong everywhere. The NASDAQ, remember you had a bullish retest regen going? Well, we talked about it last night, said it probably wouldn't hold. Well, not only did it not hold, it even opened above it. Opened below it, sold off all day long, closed at the lows. Russell, Russell was the other strong one. And the Russell does the same thing. Breaks hard. The retest regen zone was up here. That low is 1268. This thing sells off, closes at the low, down 2.5%, closes at 1246. So you've got big, wide pressure to the downside. Now, what you did not see today is you didn't see an expansion of volume. Now, a lot of people read that as bad. Some read it as good. This was an expansion of volume when you consider what you were coming against. But if you consider what you're coming into now, it isn't, right? For example, 1242.77, if you get into that bar, you got more volume on that bar than what you're coming down with. The other piece of it always is how fast do you come down. So in this case, for example, you're coming off this high, beeline move straight down. You know, if you measure it out, you've got tops at 1296. You closed today at 1246. That means you dropped roughly 50 points. 50 points back into that number. That's, you know, I can't do the math that quick, but that looks like about 4%. So 4% off the top, all straight line. That's fast. That usually gets a bounce. And in a lot of times those bounces come after breaks of swing point lows, just like we saw. So, you know, what I'm saying is I wouldn't be surprised to see some sort of a bounce tomorrow. And given the amount of move that we've made, you know, a 1%, 1.5% bounce could be nothing more than a bounce. You know, so don't get all excited if this thing bounces tomorrow that much, because it really doesn't mean that much in the context of what just happened. What really matters is where you close the end of the week. Look at the sectors. IBB is the only one that's still holding up there, but this one actually broke its retest regen off the bullish breakout. That one fails. Coming into a big bar, gets into it, stays into it. A lot of times that can take you to the bottom of the bar. So pretty bad news there. And if we go to another one's been strong recently, home builders, they come off. Transports, we've been talking about transports breaking down and coming after that October high. It's in it, folks. It's there. You know, I've been talking about it for 3 weeks, and now we're there. You're into it. You stay into it. Don't have much volume if that volume you know, maps out that way, but you're into it. So I suspect it will bounce from here. The point of showing the sectors is that some of these are just breaking. Some of them have broken quite a while ago. If we go to the basic materials, right, this one just broke. If you bring it back on the weekly, just broke here as well. Multiple time frames, multiple swing point lows. You don't want to see these do it, and you certainly don't want to see it across the board where you're seeing it in sectors and you're seeing it in the indexes. So this week, as the week unfolds, it's going to be a big week. Here's the SOX. SOX had already done something strange, had the big move up. That was on takeover news, right? Takes it all back, gets a bounce, and now gives it all up. Breaks multiple swing points here, also doing it on the weeklies. Energy, everybody's talking about bottoms. Well, that doesn't look like a bottom to me. That thing's coming all the way back to the lows. Financials, we're one of the few groups holding up, gives it all up today. Back the other way, breaks multiple swing points. Looks a little better here on the weekly, but still a lot of damage being done out here. The industrials, we were talking about them getting ready to break. Well, they blew them all away today. And if you look at them on the weekly, blowing away multiples on the weekly as well, potentially. Technology had started to give it up already. Today it definitely gives it up. Breaks swing points, breaks it on both time frames. Two other sectors been strong is healthcare. Let's go to the healthcare market or index. Here's XLV. So the XLV comes off. Hasn't broken swing points yet, but definitely some damage on the way back down. The other one is consumer discretionary. And if we look at it, it comes off hard again. Just like healthcare, it was up far enough to where it's not damaged yet. But look, all these things have multiple swing points located in the same areas on the charts, that's where damage can be done. That's when I talk about the structure of the market. You know, that's the structure. I talked about the structure. You know, I don't know how many times I've talked about this and people say you can't see it coming, but folks, you can see it coming. And I'm going back just to see if it even shows up anymore. And it's somewhere in here. Here it is. There's the character change, and somewhere I talk about the structure. So, you know, it was like 2 or 3 months ago I started talking about this, and now it's finally actually turning over and coming true. Let's go to the world markets, because, you know, the big question was what would happen in Greece. You know, how would it affect the European markets? And last night I talked about this swing point low being kind of the area, the target that I expected it to try to come back to. It actually did. It came right back into that price point, 48.74, closes at 48.69, so you can see it's right in that area. That's the area to me that makes sense. Volume here, 1.8, that's the bar it's coming into, does 1.7. So when I look at it from that perspective, this doesn't look that bad. Now when I look at the DAX actually came into those lower price points that I thought it would, and the volume expanded. So DAX weaker, CAC's looking okay, but still, overall, even though they suffered pretty big drawdowns today, 3.5%, they'd already made a 6% run off the bottom. And so you give 3.5 back. If it holds, it's not a bad looking picture in Europe. The other big story was Shanghai, because the Central Bank of China, you know, lowered rates much more than people expected, and yet they sold off anyway. I don't have the volumes here. They were actually a little bit higher last night. They did about this much as this bar, about 7.3 last night. And I'm just looking to see what they came into. Let's look at it on the weekly. And coming into, yeah, it depends on how much volume it does this week, but it's doing 25 there, and you did 7 last night. So you're going to be pushing about the same volume as these bars, the bars you're coming back into. I expect Shanghai, if Europe stabilizes, I think Shanghai is going to rally. You're down 22% already, right? And that's in 2 weeks. That's the kind of damage that was done here. You're going to get a big bounce when this thing bounces. If you're going to trade it, though, of course, you've got to be able to time that bounce. And so far, you know, going back to that daily chart, so far it's not showing you the bounce potential. You got a long tail. That's a good first sign. Now you need something else to give you a same sign. Matter of fact, a trade down there tonight that closes above it on less volume would be a good sign, for example. You're always looking for something that gives you an indication that what you think is going to happen is actually starting to happen. So I want to touch on a couple other points, and then I'm probably going to leave it at that tonight and give you my wrap here. And what I want to touch on, or the idea that I wanted to touch on, was that if you go over and look at the currencies today, they do not fit the pattern of what you would have expected. You would have expected a flight to the dollar. That's what you got early. But these totally flipped around, closed up on the day, almost 0.5% in the euro. Why would that be? And the only thing that I could come up with, and actually it was the members, I put the question to the members and they came up with it. And one was that the cross trading that's taking place in the currencies, in terms of leverage and so forth, is one reason. You may have seen some of those unwinds taking place. But the other big thing that seemed to make sense was a lot of people have been betting against the euro. When this thing didn't hold down on supposedly the crumbling of the euro, a lot of those bets probably got unwound, and this is probably short covering that you're seeing as a result. So that probably to some degree is what's happening. Then I look over to Japan and I say, okay, well, why would the yen jump? If it really was that way. Well, again, this one makes more sense if you're thinking about unwinds taking place in leveraged trades. That also could make sense in this case. So I think those are probably the two best explanations. Gold pops up today, but given what happened today, and let me grab gold here. given what happened today, you really didn't get much of a move in gold. I mean, it's kind of surprising that you couldn't get more of a lift. That tells me that, the fear trade into gold just isn't there, which means that gold is either in huge supply or something else is happening. Now, if we go to bonds, if you go to junk type bonds, they got sold off today. That's exactly what you would expect. That's the high yield bonds. Here's the junk bonds. But then if you go over and you look at the high quality corporate bonds, they actually rose today. They didn't fall. And then, of course, if you go over to treasuries had a big day to the upside. Volume expands. Treasury looks like it's finally put in the bottom and is going to rally at least for a little while. And then, of course, the dollar we were talking about. When I come back, I'm going to talk a little bit about what I believe is going to happen from here, not only tomorrow, but the rest of the week in the wrap. Be right back.
Learn how to trade with the Trade with LA service provided to you by TA Today. This service includes daily portfolio and comments that are emailed to you before the market opens each morning. We provide a daily view of the markets and a model portfolio you can follow even if you work another job. Every weekend, LA records his weekend broadcasts that gives you a synopsis of the week and a prognosis of coming weeks. You will also have access to our Teach and Trade room, where LA provides day trades and teaches neoclassical concepts throughout the trading day. To get started, go to our homepage and click Trade with LA.
Over the years, I've talked a lot about the structure of the market. And, there's still a lot of skeptics, and I can understand that because, I've been skeptical myself of other people's systems over the years. But there is a structure to the market. And when the market starts to flatten out, that's when that structure becomes more apparent. And what I mean by that, and I talked about this a little bit last night, is that when you see a market that's been up, a long time, and it starts to flatten out at the top, right? That's when these swing point lows start to gather, right? They start to gather and it flattened out here, then got a little bump up and flattened out again. When they gather together, what does that do? Well, if I'm a trader, or even if I'm an investor and I want to control risk, right? When I see this flattening out, I'm always looking at where do I have to start to protect myself. And as you can see on this time frame, on the TA Today charts, they outline those areas that are protections. And so on the shortest time frame on the weekly, in other words, if I'm a little gun happy, right, trigger happy, I would want to protect into this area. And right now we haven't broken it down completely, but we've definitely made some damage, right? We've come off the highs down into the area where the buyers should show up. If they don't, the next level is way down here. And so that's a long way down. And now if I'm, again, trigger happy, I'm going to protect myself in this area. And if I don't protect it right at the swing point low, which is what happened today, some people stops triggered today on that area. There's another one right here. And anything underneath that suggests that more than likely you're going to make it all the way back to here. Now, you don't have to do it immediately. You may do it immediately. But what I'm saying is that the structure of the market is such that the faster move down can take place when these areas line up this way. They've been lining up. I've been talking about them lining up. They are here. And now they're finally starting to trigger. Doesn't mean it's going to crash. Does mean that some damage has been done. And it does mean that some more damage could be done if it continues. And that damage I'm talking about is not only could you go to 2045, you could drop all the way of 50 more points down to 1995 or so. That 50 points on a 2000, that's another 2.5%, 3% down. You're already 3.5%, 4% off the top. In other words, you're talking 7, 8% already. And Lord forbid if these break, you go all the way down here. Is it going to happen? We never know. We only know that in retrospect. What we do know is what risk is in front of us. The risk is what you have to control. So you have to draw the lines for yourself as to where you're going to protect yourself if you have to do so. Right now, my suspicion is you get a bounce tomorrow. Big moves happen on failed bounces. So let's go back to the S&P 500. Let's talk about the area that we could get the bounce to. I suspect this is the area. If you come up into this area and you fail and you start back down, it's going to be an ugly scene. The ideal case for the bulls this week is to get back up into this area and hold, and hope that on Sunday the Greeks vote no, or actually they vote yes, that they want to negotiate, and then all of a sudden you see this thing go back up and stay in the range. The broader range, right, is the range that we have over here on this time frame, and that broader range is about this area here. Underneath there you've got another one, right? Underneath there you've got another one. We've drawn these out before, and finally you've got the last one at the bottom. If you get into here and you break this, you can always go to the bottom of the next one, right? The floors are lined up. If they start breaking through the floors, they're going to go to the next one. You're still on this time frame in the top floor. You don't want to see it break down, and in fact, if it's me telling you, I don't want to see it stay under this low this week. So as the week proceeds, that's what you want to be watching. As far as tomorrow, I would expect probably 0.5% to 1% bounce at least. Whether it holds all day is another story, because then it's news flow. But that's what I would expect probably tomorrow, and I would even expect probably a gap up, and if that's the case, it's worse. I'd rather see it start down and then come back. I don't expect that actually, but that would be the better case. So tomorrow, some sort of a bounce. I don't think it's going to hold very long. And then it's going to come down to news flow Wednesday, Thursday. You've also got economic data, and we need to see what happens in China. Those are the big pieces of the puzzle. If the stocks can hold the swing point low this week, it would be a major victory, in my opinion, for the bulls. To get this thing to break down, the bears need to keep pushing. And one last thought here is that you already have ABCD structures that have printed and fulfilled. The bounce from here would make sense. Let's see if it unfolds that way. I'm LA, that is, and it was your daily NeoTA wrap. We'll look at it tomorrow, see where we're at. That's my thoughts on today, on the damage done today, and on where we go next. Have a great one. I'll see you next time. Good night.